All right, welcome everybody to the live afternoon swing trading room. We're broadcasting live from Nashville, Tennessee. I am Matt DeLong, your host for this afternoon swing trading room. And today is Friday, December 4th. We have two events coming up next week you need to be aware of. The Trader Psychology class, December 7th through the 11th. So that is a 5-part class. So if you wanted to RSVP for that, certainly do that 5-part series that Jeremy will be hosting from the BVI, totally free. Sign up. I'm already signed up. Otherwise, there'd be an RSVP button. Sign up if you want to improve your trading. For those of us who are always looking to improve, always become the best version of ourselves, absolutely sign up for that. And then this next weekend, Saturday, a week from tomorrow, we have the first annual 2020 Traders Summit. And you may recognize some of these faces: Ricky Cadden, Jerremy Newsome, yours truly, Johnny Guarco, Robert Falco, Stephen King, Arabia Johnson, ladies and gentlemen. Some of you guys I know are interested to hear what she has to say. Tracy Ball, right? We got some big hitters on the team, right? David Potvin, Dan Jansen, Tony Pollock. 8 hours of nonstop stock trading education. Now, some of you guys have definitely signed up for it. I know we've got a couple hundred people who've already RSVP'd. But if you guys could do us a favor and you could share this link with your friends on social media, this is an absolutely awesome and amazing way to invite your friends to just check out a little bit of the awesomeness that RLT has to offer, right? So this is 8 hours of all nonstop stock trading education. And Jeremy and I will both be emceeing the event. We of course have our own little presentations. Here it provides the time each person is presenting. So if you don't have time to watch the whole thing, not a problem. You can watch bits and pieces live for free. However, if you would like the recording, it's just $9.97. I promise you guys, this is something you'll want to see, and you'll want to share this with friends. Absolutely. It is going to be amazing. Of course, it's our first annual, so we'll be doing this every single year, and it'll be an amazing event. So who's ready to talk about stocks? Welcome to all-time highs, right? On SPY, all-time highs, ladies and gentlemen. How amazing is that? So you'll remember the past couple days we talked about what distribution days are. Distribution days are my little red flags. And it looks like let's see, we have 1 or 2 more days, and this, as long as we chop and go a little bit sideways or higher, there's no crazy sell-offs, this last flag will go away. And so some of our yellow caution flag will be reduced to just normal trading operations. Obviously, you give it some more time and some of these other flags will go away. So for those of you who are not familiar with distribution days, a distribution day is basically an IBD concept that just defines that if there's a 0.2% sell-off in a major index on higher than the previous day's session, right? So you guys see here on this candle, right here, that the volume exceeds just not by a ton, but it does exceed the previous day's session. And usually when you have a good 4 to 5 days of selling and distribution days, 4 to 5 days clumped together in the previous 25, going back 25 days, that is typically where you have like a NASCAR yellow caution flag out saying, just be careful, take some profits early, right? So congratulations to everyone who had just an amazing, like November and December is already setting up to be pretty decent, pretty solid. Now, there is something you guys may be aware of called the Santa Claus rally, and that typically occurs between December 24th and New Year's. And it's basically like the time in between Christmas and New Year's, Santa Claus rally. And it's typically a bullish time historically, right? Now, most holiday seasons, the volume is a lot lighter than normal. So just keep that in mind. And that's kind of what we're looking at on SPY. It's look, be bullish. I mean, what else can we say, right? You guys will see, I actually have a green flag here, which basically is considered the opposite of a distribution day, and that is a follow through day. And I'm working on that. This is on a weekly chart, so it doesn't necessarily apply, but I'm working on trying to implement that a little bit more. But ladies and gentlemen, this is what a bullish trend looks like. Absolutely. Of course, we all remember what happened during COVID, during the craziness that is and was 2020. That will go down in the history books of the craziness. So that's what we have for you on SPY. If we were to look at the Qs, similar kind of thing. We don't have as many. We have one less distribution day. The SPY, we have 5 here, we have 4. And someone asked what the numbers were, and they basically just are, we're going back 25 days. And this is me kind of debugging and troubleshooting. You can't see number 25, but it's there, I promise. It's kind of hiding behind the flag. So that's kind of what that's kind of what that is. And that helps us determine whether or not we want to kind of close some, existing profitable positions. Some of you may remember that Jerremy called this gapping up. He's like, go to cash, right? And we had a similar kind of move, and we're breaking out a bit. I'm not sure if that'll hold, but we very much are taking profits at all-time highs, right? You don't necessarily want to get in at all-time highs. You don't want to be like what we talked about yesterday, where you're the guy playing racquetball and you're chasing a racquetball full speed towards the wall as the ball bounces and you run into the wall. You don't want to be that guy. So that's kind of what happens when you buy at all-time highs. There's always going to be some kind of a pullback. And if you can just be patient, you will be rewarded, right? Yep. What's follow through? Let me post a link real quick for you guys. Mr. Distribution days. Let me post a link that explains it. There we go. No, I think this is it. Yep. So I will post this in the link in the chat if you guys want to read up on it some more. Yep. Nitro is the guy running into the wall. So what's interesting is, as we talk with more and more traders every week, every month, every day, what's interesting is that the common thing that comes up is discipline. And all the time we were asked about how would I exit or enter this position I'm stuck in, Matt? How do I rescue this? How do I take this losing trade, turn it into winner? And at the end of the day, all we can do is kind of judge you based on your plan, right? So I wanted to ask you guys, how many of you guys have written plans? Like if I was to audit you and say, this trade, these 3 trades you took today or this week, how well you did against your plan. How many of you guys have that? Go ahead and put a 1 in the chat plan. If you have a written plan, something that we could almost like compare you against, right? Yeah, so you guys are on a great path, right? I know there's so about 10 people. We got 10 people who are setting themselves up for success. I love it, right? So again, if we were to audit you and say, how well did you follow your own plan, right? And we raised our game and raised our standards a little bit. We said no to average, right? For the average trade, we just said no to being average, to having an average life. And if we were to raise the standard and have this extreme accountability, we're either get an A+ or an F. We either did it exactly or we didn't. We executed the plan or we didn't. I'm wondering if, as we go into a new year, ladies and gentlemen, I'm wondering if that could be a huge, huge difference maker for some of you guys' trading, right? Nitro says he has a plan for every strategy. Absolutely. It is a little hard for us to say, hey, here's what I would do with this trade, because my first question is, what strategy did you execute? Well, I kind of use support resist. Okay, well, show me a screenshot, right? It's really, really tough to, so I don't know. I would have never taken that trade, and you're kind of way upside down on it. So we can help you kind of work things out over time, but there's not a quick fix it button. You guys understand, you know what I'm talking about. So let's look at the diamonds. Look at that, 2 distribution days on the diamonds, 2. So that's looking pretty solid there. So let's go through our list on Fastly. How many of you guys made some money on, or realized or unrealized on Fastly today? I got a good position built on Fastly. I wanted to get a little bit more, and we didn't quite get down to my 60 level and build my pyramid. However, today was a good day either way. I mean, look at the range on this thing. It went from a low of 82 to 97, right? So it moved a good $15, right? Look at that, $15 move. Of course, it did kind of pull back about half of its gains, but I remember looking in my account, in my Alpaca account, and it was up. My Fastly here, this was up nicely, right? So again, this is my Project X, sponsored by Jonathan WageNet, our own lovely and talented software guru, Jonathan Wage, who lives, by the way, here in Nashville. All the amazing people live in Nashville. Nashville has lots of amazing people. The world has, the US has lots of amazing people. RLT has lots of amazing people, right? Okay, so Fastly, it's amazing, amazing. So let's look at what kind of how this set up for Momo. This is exactly what happened yesterday. I think it was yesterday. Yeah, yesterday I got a trigger. You see that on at 11:06. So if I was to go into my WageNet, you'll see my orders. Limit buy. Look at that. Limit buy 60 shares on the 3rd, yesterday, 12:24. Filled. Yes, please. Again, Momo works if you let it work. And the cool thing about automation is it removes a couple things. It forces you to follow the plan. You have no choice, right? You really have no choice. And the other thing is it takes all the emotions out. So if you get all emotional, just forget about it. Let it do its thing. Let it work for you, right? Absolutely. And I got into this originally. Actually, I don't think I had this set up in WageNet before, but I did have some shares and calls that I rode last, helped some of my hours in November, right? Now, the cool thing about WageNet, sorry, this is really not a commercial for WageNet for Project X. It's turning into one, but it's not. But you can set this up to auto submit or email you for an approval, right? So if I have all these tickers, maybe I just want to approve, manually say okay to Teladoc and Peloton, but not NVIDIA, right? So that's something that you set up. And it's currently set up with just the Momo as far as subscribing to a strategy itself. Yeah. Okay, perfect. So anyways, that's what I have for you guys on Fastly. It's amazing. If there's any kind of pullbacks, I'm going to be selling puts. I do need to build a little bit bigger position than I have, but if it runs higher, that's fine. I'm in about 2/3 of what I wanted anyway. So yeah, be bullish, right? Fastly, for those of you who don't know, Fastly allows things on the internet to run faster. I mean, if you think about the future, is that ever going to go away where people want the internet to run slower? No. Fastly did have this kind of drop off here because they lost TikTok as a customer. You know, it happens, right? I think it was their largest customer and is a big chunk of their revenue, but over time they'll easily replace that, right? It'll take a little bit of time, but they'll easily replace that and continue growing. So Fastly is one of those companies that I personally would put. I'm almost tempted to throw a bunch of money in an account and then put it in like a what are those things where you bury them in the ground? The time vault. What's that called? The time capsule, right? It's like put my password in a time capsule buried in my backyard. See what it looks like 5-10 years from now, and don't touch it. Right? That'd be amazing. So that's one that I probably would do that on. Yep. It's not a huge account, but I'm sorry, it's not a huge. It doesn't have a big. Let's go look at it. It doesn't have a lot of market cap. It's definitely reasonable. The PS is elevated at the current state, but the market cap it's only 9 billion, right? What's a few zeros, right? But it's not like NVIDIA or some of these other companies that are hundreds of billions, right? Yeah, 335 billion. So smaller company relative to the big boys. So yep, that's Fastly. Let's see. Rumors of a buyout. Okay, nice. Cool thing about Momo is the news doesn't really matter, right? Are you guys seeing that? Are you noticing that? So how many of you guys are trading Momo? Go ahead and put Momo, type that into the chat pane real quick. I know some of you guys are. Get questions from you guys. Yep. So 4 people, 5 people, 5. Okay. About 10, 12. Yeah, nice. So It is it's a solid strategy, right? And at the end of the day, it really doesn't matter what the news is. The news pushes the stock higher or lower, just like we had a nice sell off during here. And my favorite setup, as I mentioned the other day, was I like some kind of a nice sell off, and then kind of maybe a couple attempts to go higher, and then jumping in as it continues higher. You guys see that's almost like a perfect, almost not quite, but almost like um, picture perfect. It's almost an exact ideal setup that I would be looking for. Of course, I'm just playing the strategy, but ideally we have a nice sell off and then a flip the other direction, right? So that's the ideal. So let's take a look at F fuel cell energy. Let's see what Momo says. So Momo would say to short here. Oh, and by the way, ladies and gentlemen, in my account, I am really only long. I have, you notice all these are long. So I'm only playing Momo long right now in this. I'm testing out some things, running some experiments, but I'm only long. And in the account, you can say long, short, or both. You can configure that. So it makes it super easy. Because the market is so dang bullish, I don't know that I'd be shorting a ton of things right now. Maybe individual stocks, but certainly not the overall market as it's designed to go higher. I saw someone posted in chat today about someone has been short Tesla for like the past 5 years and is reducing their short position in Tesla. And you just scratch your head and you're like, what are you thinking, right? You guys want to look at Tesla on a 5, like, who does this look like the kind of thing he's short? Maybe, certainly not 5 years ago. Well, let's go to bigger. Let's go to weekly. So if you were to look at 5 years ago, I mean, right in here, $50, man, you're getting just, I don't know. It doesn't look like a short to me. I mean, maybe there's little bitty pieces in here you can day trade in and out for short term, but can you imagine being short at 50 and you're now at 600? I mean, you have to be scratching your head thinking, what was I thinking, right? Obviously, hopefully risk management's built in. You have some, but I don't get it. I mean, who would want to short Elon Musk? I mean, what kind of crazy, what has to be going on in your head to think that that's a good idea? I don't know. Here at RLT, we are very bullish on Tesla, of course. Be bullish, Elon Musk. Absolutely. Elon Musk, president 2024, right? We'll see. He probably doesn't want to have to take a pay cut though, right? So that there's that. Yeah. And it's amazing. And I am considering getting a Tesla myself. I actually looked at the paywall and the solar tiles the other day. They don't offer that in my area just yet, but the tile, the installation and stuff. So one day. Okay, let's take a look at DocuSign. I drew this the other day, kind of like we're gonna have a pop and a pullback. So this setup is still valid if you guys are considering a entry on DocuSign. And my strategy, my setup is based off of this right here. Basically, we got a 10 EMA signal to go bullish right here at the close. If you got in, great, you're profitable. If you got in to close on the 3rd, so that'd be yesterday, congratulations, you're profitable in that trade. I do think it'll pull back and then continue higher, right? So if you didn't get in, go ahead and set up an order and wait for a pullback, right? Automatically fill. Now, for those of you who, I don't know if you guys have ever done this before, but if you set up an order, like I have limit orders right now on a bunch of things that are based on some kind of a pullback, meaning I missed an entry that I decided I wanted to get into, or maybe I had too many positions when it actually triggered, and so I just passed on it, and I'm thinning out my positions now. But having an open order, and then you one day look at your account, you're like, wow, cool, that order got filled, and I'm up an hour or two. I mean, that's what you want out of swing trading, isn't it? You don't have to like grind and battle every day, kind of grinding out half an hour, 3/4 of an hour day trading. You want to set this up, let it work for you, and then enjoy life. Go to the beach, go to the mountains, go skiing, go spend time with family, go snowmobiling, go insert whatever favorite winter activity here, right? That's the kind of life that I want to live. That's what I want to do. I don't want to have to grind it out all day, every day, trying to make an R or two here or there. So that's kind of what I have on DocuSign. And again, we got the double signal of Momo and the 10 EMA both giving the thumbs up, the same signal on the same day, which Jonathan Wage, if you're here, we need to explore that some more. But that's something we're going to be studying. Is you got two different strategies that look at totally different things that are giving you a signal to both be bullish on the same exact day for a swing trade. And I don't know, maybe it's just a random occurrence, but it seems to definitely seems to be something there. All righty. So Mike says he's noticed my average swing trade R is higher than absolute day trade R. Yeah, most people's is. Most people, it's not proper English. Most people's R is different. So if you day trade and swing trade, no one ever told me, hey, your R might be different. No one ever told me, and I figured that out at some point. Jeremy and I both traded $1,000 R. It's going to be going up here in January to probably 1,500. But most people, when they start out, their swing trading R is a little bigger than their day trading R. The day trading, as you guys know, a lot of things can happen. Fed news, interest rate stuff, presidential tweets, all kinds of things can move the market intraday on a minute, hourly kind of basis. Swing trading that is not nearly as impactful. Like those momentary news spikes don't affect your swing trading nearly as much. So it makes sense to have a bigger R. You got money working for you over a longer period of time. So definitely makes sense to do that. So let's take a look at the long-term moving averages here. Let me remove this guy. So I think it looks good. I mean, as long as if there's any kind of pullbacks, right? You're looking for a $200 strike put, and you're looking to sell that. If you're familiar with put options, that's what my green dollar signs are for. Right? And Nitro said swing trading is 10x more profitable than day trading. How do you guys feel that way? How many of you guys are CSTs, closet swing traders? T is a closet swing trader. We got one one swing trader, closet swing trader in the house. We got 3, 4. Sammy says he's come way out of the closet on swing trading. Mike M is still both. There's nothing wrong with it, right? But ideally, you want to be in a position where you can make the decision. Like you choose to day trade. If you want to sit in front of the computer all day, every day, be my guest. You have the option. You're in a bad place where you have to do that to generate some cash flow. You have to grind it out, and that's never a good place to be. I was a software CEO for 14 years, and I spent all day, every day, 12 hours a day for 14 years in front of a computer, and I do not want to. That's the last thing I want to do is hang out in front of the computer all day, every day. I want to take my teenage daughters to lunch. I want to spend time with the wife. I want to sip my tea on the back patio, right? I have other projects, investments, other things I want to do in life. So that's kind of what I want to do. Okay, so DocuSign, be bullish. If you want to get in, if you're not in it yet, this kind of a setup right here, I would say almost like 231 by 205.50 is probably a good kind of numbers to set up there on DocuSign if you're not in it yet. And again, do not chase things higher. Don't be the racquetball, right? Full speed towards the wall. You're chasing it. The ball bounces and you hit the wall. Don't be that guy, right? So that's what I got for you on DocuSign. So next is Datadog. Datadog is one of those that are on my Matt's fly list, as is Fastly. Solid day. If you are, congratulations. If anyone is in Momo on Datadog, if we were to replay this, actually, let's replay it back from here. If we were to play Momo, which seems to be popular. Some of you guys are cranking out some R's. I appreciate you guys reaching out and asking questions and making sure you understand it, right? So here on this day, on the November 25th, we were to go back in time. We got a signal to go long, right? And we would have bought, for those of you who aren't familiar, you would have bought at the close at the close of this candle, not the close of market, but the close of this candle, which is the first 78-minute candle of the day, you would have done a limit buy right here. And you would have invested X number of dollars into the stock. And we don't use, Momo doesn't use the traditional R risk method. You do get out when it tells you, but you don't necessarily have the same risk dollar amount. And so if you were to get in here, you guys, when it set a signal and you were to go in, set up, sorry, I can't show you alerts, but if you were to set up an alert, maybe you're at work, you get an alert on your phone. Hey, be bullish on Datadog. If you didn't get in right at the close, you guys see it went a little bit lower and continued higher, right? So easily could have got in some kind of it looks like a short window of time, but definitely doable. That's the cool thing about the alerts for these strategies, that you don't have to get in the exact moment you get the alert. Now that's very different than most like alerting services where you're just signing up and chasing someone else's signals. These are, you're setting up your own. And for those of you who struggle with discipline and not being disciplined and just chasing any and everything, if you made yourself a rule that said, I can only take a trade when I get an alert, I mean, how amazing would that be, right? How much would your trading improve in 2021 if you had to take a trade, it had to fit one of your strategies, the strategy was written, and you had to get an alert? I mean, that would solve all kinds of issues, right? And you decide when you want to exit. If you want to exit partial at some point, if you want to hold it, we all know there's some crazy, I mean, look at this candle right here. That's a crazy looking candle compared to the previous candles, both in size and shape and the range, the low and the high, how far it moved compared to some of these candles that are beside it. Definitely, you know, if you're bullish, it makes you scratch your head, but we all know what kind of what happens. It continues higher. So, you know, maybe it scared you out and you took a small win, and then you're now trying to get back in and chase it higher. And then this happened. You don't want to do that, right? You want to wait for the signal, set it up. Now, I do talk to you guys a lot. I apologize for not typing or not being super active in the main chat channel. I have so many DMs and stuff. It keeps me pretty busy, but, I do think that that Momo could make a huge difference maker. There's some people who still don't quite understand it. We still get questions, but I think it can make a huge impact on people's trading, right? And again, I built this and we're presenting this in a fashion where here is the recipe for you to follow. We're all familiar with recipes with kitchen, right? Of course, any recipe like in your kitchen, if you're making banana bread, apple pie, it always assumes you know a little bit, right? You gotta know what a teaspoon is. You gotta know what a mixer, a blender, right? There's some basic things you need to understand. And then here's a recipe for you to go off and replicate that and do that on your own. I'm not aware of any other training education company for stocks or futures that says, here's my actual strategy. Here's how you can execute on that and present it in like a recipe format. I'm not aware of any. Let me know if there is. I could be wrong, but I'm not aware of any of those. So that's kind of what we want to empower you guys to make your own R's, right? My success is based on how many R's you guys make with some of these strategies, right? So if we were to continue higher on Momo, you guys see that we still have a green shaded area, so we're still going to be bullish, and we get the signal to exit right here. So we made the gain, the difference between here and our exit. So again, these stocks are typically, the overall market's been so bullish, so I would not be short for too long. Here, again, you get the signal to go short, and then it reverses and goes higher. And again, if you're not in, there's plenty of opportunity to get in. If you did not get in right at the close, if you missed it and it started going higher, it's going to pull back. And even if you missed it 1, 2, 3, 4, 5. Yeah, so this would be the last candle, right? So the 78-minute chart has 5 candles for the day. Imagine having to make sense of 5 candles on a day instead of however many there are on a 3-minute, or however many candles come into a trading day with a 3-minute chart. Lots and lots of candles. I imagine 5 would be a lot easier, don't you guys? You guys think? Yeah. Nitro said it might be 20x more profitable. I think you're referring to the swing trading. Yeah, so there's people. So the thing I've learned is that swing trading is like a specialty, and day trading is a specialty. And trying to get really good at both does take some time. Jeremy's been trading for, I don't know, like 100 years. He just looks super young. And it does take time. You have to have time in the saddle. You have to have time, executing thousands and thousands of orders before you kind of get the general feel. Not obviously you become an expert after like 10,000 hours, right? So you've been doing this full time for 5 years. You're kind of a senior trader level, right? And everyone else is kind of junior traders as far as experience wise. And that's okay, right? That's okay. Nitro will take a 20-hour a week pizza and drinking beer. I'm sorry, take 20-hour a week while eating pizza and drinking beer, swing trading. Yeah, absolutely. Momo's getting its own Christmas card this year. It's funny. All righty. So then Tran, which indicator am I using? I am using my Momo. Does anyone have the link? Can someone grab the link to that and put that in the chat for anyone who is new to Momo, who would like to get that? Can someone grab the link from TradingView and post it in the chat? I appreciate it. I shall continue. Okay, green shaded area, which means we don't know. It's super easy. We're bullish, right? And here we are caught up with where we are today. There you go. So Cal Irwin is posted there you go. Actually did that to all panelists. I will repost that one. Okay, so Datadog looks bullish to me. Definitely looks bullish. And if you didn't get in there, go ahead and you can keep an order open if you prefer. Long-term moving averages looks solid. I mean, look at this stair step line for all of our put sellers. How many of you guys sell put options? Go ahead and put the NP letters NP naked puts. Put that in the chat pane. Let me know how many put sellers there are. It is a little bit more of an advanced strategy. You obviously have to know how to trade stocks. You have to know how to trade options, and you have to know how to trade options and sell option premium, which is kind of like we'll think of it like I don't know, maybe it's a brown belt in karate, right? It's not quite black belt, but maybe it's not a white belt, but it's somewhere farther up in the complexity and more advanced. It's certainly not hard to do. But you do have to understand the dynamics of a put sale where you're kind of opening yourself up for a liability and you're collecting premium just like an insurance company would, right? It's a different level of risk than just trading an R, right? You're in and out, right? Okay, yeah, so I got a handful of put sale traders. Cool. So I would say if there's any pullbacks and we get our green dollar sign in this green zone, obviously, if we're making new all-time highs, we're not going to be selling puts because we want a pullback. We want people to, we want to be bullish and we want people to overreact. We want their emotions to get the best of them, and we will take advantage of that, right? So with put options, we're looking for these kind of dollar signs that say, hey, check the premium, and that's what we would do. However, we want to always respect this 200 simple moving average line, right? That's our long-term moving average, our long-term support. We want to make sure that we're above that because if we were to look at something like AYX, you guys can see what happens when you go below. If you close below the 200, you kind of hang out below. Like it's kind of like a pity party for AYX. And I have shares that I'm long in here. I'm not adding to my position. I'm just holding it right now. Is up just a smidge today. But you guys can see, you guys all see that where if a stock closes below the 200 SMA, the long-term, this red line, you guys, if you close below here, it just kind of hangs out. Now, obviously, if it closed below and then went higher, that would be good, but we would be above the 200 SMA. But this is kind of what happens. This is a great example. When you close below, you'll see it happened over here as well. It closed below and hung out for a while. Now, I think long-term AYX is a solid company. I'm not adding to my position. I'm not reducing my position. I'm just kind of holding right there, and I have that quite a bit of shares in my long-term account. So I pyramided into that, so I got a pretty decent cost basis set up on AWAX. However, let's go look at New Relic. New Relic's okay. Long-term, if you're selling put options, you guys can see here, like the stair step of the green line, which means it's had better days. That's kind of what that means. Ideally, ideally you want a stair step for put sales to look like this, to be continuing up and going sideways. And somewhere, I guess, around the COVID, it kind of went down and it's kind of going sideways again. So it's kind of hovering and flirting with this 200 SMA. You guys see the action there. So I don't know that this is something I would sell a put option on. I would need to look a little bit further at it to see if it meets the criteria. It's not on my watch list. I'm very familiar with everything on my watch list. However, let's take a look, see. So our sales, quarter over quarter, it does not match criteria. Oops. So sales quarter over quarter, ideally that'd be 30% plus, which just means 13.9%. It's okay. It's not wow material. It's just right? How many of you guys have ever owned a small business? Put a SB into the chat pane. Sammy, Cal, Hildy, yep. Mike, Danny, yeah. So lots of us, Lehman, Nitro, Terry, Michael, yeah. So lots and lots of us have started companies, and if you grow your revenue 30% as a small business, that's pretty decent, right? And if you have if you're growing your revenue 30% or more a year, ladies and gentlemen, how many years would it take to double your revenue at 30% a year? Now you got to take into account the compounding factor. How many years would it take? No, 5 years is not correct, it's less. 3 is close. I don't know what 70/3 means. The answer is 2.5. So if you take 30% for on year one, right? Say $1 million. Next year, your 30%, you'd be 1.3. Next year, you're 30% of that again, and then another half year to literally go from 1 million to 2 million. Now, that may sound like a lot, but when you get into scale and you have $600 million worth of revenue and you're growing at 30%, which in this case we're not, but a company like Shopify is just mind blowing how much revenue these companies have. 2.46 billion in sales. Okay. That's their revenue number. And look at this, almost doubling. I mean, how crazy, like, can you guys, like, can you get your minds, your mental minds, get your mental legs around that? It's just crazy how, I mean, that's nothing short of a miracle. And people fuss say, oh yeah, the PS is high. Shopify is a leader. Have you guys, in case you don't know, valuations for leaders are very, very different. You can't compare like Shopify versus TJ Maxx, right? It's not apples and it's apples and it's rotten apples and Lamborghinis. They're two different things. And you guys can see the stair step. That's like the perfect setup. Now, obviously, that's where we are right now. Anything could happen. Things could fall off, right? They could have a security breach. All kinds of CEO could be in some scandal. All kinds of things could happen in the future. But this is like a perfect, ideal kind of setup. On my software company that I ran, we competed against Shopify, and some investors in Nashville said, Matt, we want to buy your company. And I said, hey, you want to pay me to take my headache away from me? And as any normal entrepreneur would say, yes, please. So I told it to them, and haven't worked with them in years. But anyways, so I know a little bit more about Shopify than the average company, but it's amazing. So New Relic, And you guys see why I'm saying that? Because of they had this, actually, even before COVID, they gapped down, and I'm not sure, I haven't dug into all the details of New Relic, but it's an for me. If you want to look at it on a medium term, if you're going to look for our 10 EMA play, obviously gave you a signal here. Those don't look like they're working out so well. This one would have worked out amazing. Could have made good 3, 4, 5 Rs here, chop. So that's something I would stay away from personally for now. And Momo, I'm sorry, as far as the 10 EMA strategy, but for Momo, yeah, looks looks like okay short term if you want to hold it for a few days or weeks. Yeah. Yeah, it has it has to prove itself a little bit more to me, just personally. So I don't know if that was helpful. That was my big spiel. My other company, Core Commerce, I don't remember if we used New Relic or we did a demo of New Relic, but it's been a few years. So yeah. Jonathan Wade is not a fan of their product. It kind of fell off in popularity. Well, that's interesting commentary because the stock kind of fell off in popularity as well. Maybe it's timed well. Yeah. So that's New Relic. Their revenue growth obviously slowed down. So the way I think about this, ladies and gentlemen, is I think about stocks in two buckets, right? And you may have heard me say this before, so just bear with me. A stock is going to be one of two buckets. It's going to be in growth mode, right? So we'll call it growth mode. Growth mode is like Shopify, okay? Or it's going to be in profitability mode. So this would be Amazon, Shopify, right? Growth mode, right? What are some stocks that would be in profitability mode? They'd be anything really that Warren Buffett owns. They're not doubling their revenue every year. They're up 8% in revenue. They're paying dividends, and these almost always pay out dividends. And to me, when people ask me, Matt, what do you think about X? If I see a company is paying a dividend, I automatically assume they're going to be in this bucket. Now, there's some like Facebook, there's a few exceptions to the rule, but I automatically think about this. And a dividend, the way I see it, is this kind of like a white flag of surrender for growth. It means we're surrendering. We don't have any M&A, any mergers and acquisitions, any companies that we think we can acquire with all this billions of dollars of cash. So we're going to rebate it back to our shareholders, right? And so you're kind of hitting a plateau when the leadership of a company comes to that conclusion. Does that make sense, ladies and gentlemen? Is that, yeah. Okay. And so I like these companies, growth companies. I'm not sure it's CVS, but let's walk through an example. Let's take a look at CVS. I'm guessing it's not a growth company because it's been around. It's kind of like an older curmudgeon. Let's see their growth, ladies and gentlemen, 3.5%. So I've bought and sold companies before. I've created them and sold them. And companies that are growing 3.5% are everywhere. Like they're just average. They're not anything special, right? They're barely keeping up with inflation. It's, if you're like, show me about the new and exciting things. Our revenue grew 3%. It's like, there's plenty of companies out there that are way better. Now, of course, CVS has a lot of infrastructure. Their gross margins aren't super attractive, right? So it's a retail store. For those of you who are outside the US, it's like a little pharmacy convenience store. And I don't think they may have some of their own branded products, but 38.5% is not super attractive. And let me show you a compare and contrast for you guys. Shopify, what do you guys think the revenue of Shopify? I'm going to say 60 plus. No, 53. Okay. Now, a company that is a pure SaaS company, Shopify offers not only software as a service, but they also offer merchant processing, which lowers their gross margins. Here you go. Gross margin let's just say 75%, which means for every $100 that Salesforce brings in, the gross cost is $25, right? It's the opposite of the 75. So their margin, they keep $75 for every $100. Do you guys see the difference? So imagine like marrying these two concepts together: high margin, high growth. Not quite what I would look for. Ideally 30% or more, but every quarter these numbers go up and down, right? But imagine having high growth companies. Let me zoom in a little bit for you guys. Imagine having high growth companies. High revenue growth mixed with high margin. That's what I'm talking about. That's what I like to look for. And that's typically what my watch list is. There's a few exceptions to that, but that's pretty much what if you look here, and this is Matt's watch list. If you look at my sales, there's a few exceptions. Beyond Meat's kind of in the doghouse with me right now, but Tesla, ignore that because Tesla is amazing and they're manually on my list. But look at all these companies, look at their revenue growth on a quarterly basis. And then look at the gross margin. Look at that. ideally anything over 50, 60% is amazing, right? So something to think about, something to consider. Is Apple still growth? Let's take a look. So there's growth and there's Matt's definition of growth, right? So Apple has been around for, I don't know, when did they go public? In the 80s, I think, early 80s, something like that. But their growth last quarter was 1%. So when I look at companies, I want them to be growing or very profitable, like A or B. Pick a bucket, right? And I like the growth bucket. If they're profitable, that's fine. That's the Warren Buffett's, the slow and steady. I like the crazy high rise, high growth, fast, more like what venture capital companies would look at versus like private equity companies would like a Warren Buffett. Any of the Warren Buffett companies are kind of private equity typically, where they're generating lots of cash. They have little to no debt. They're doing their thing. They're not growing, 80% a year. But when you switch over to the growth bucket, that's typically what most venture capital companies look at. And, and at scale, let's go back to CRM. At scale, so it's obviously one thing if you have $1 million revenue and you're doubling every year. That's on the very, very small micro end of the world. But if you're at scale like this, and you got 19 billion in revenue and you're still growing almost 30%, that's something else, right? We're not talking about, going from 1 million to 1.3 million. You're talking about 20 billion and then adding on another 30% every quarter. So anyways, that's kind of my spiel for today. Let's get back into the stocks themselves. Okay. So CVS, not my thing, but I don't see, it is above the 200 SMA. So nothing, I don't see anything there on it. I'm guessing some of you guys asked for this on the list because it made a nice move in the past 3 days. Again, don't be the guy chasing the racquetball, slamming your head into the wall as you're chasing it higher. So let's take a look at Momo. He probably got a good signal a couple days ago. Yep. So the signal would have been here, and before that would have been to get in over here. So again, if you like CVS, you want to trade it with Momo, be my guest. Absolutely, nothing wrong with that. CVS is not on my watch list personally, so I can't necessarily take that trade myself. But let's take a look at CRM. CRM is down. Obviously, Momo would have said, hey, short at the close of this candle right here, right? So you would have done like not a stop limit sell, but just a limit sell. Limit sell there, right? That makes sense. If you got in on that, congratulations, you're very profitable. I would not hold these companies short, especially these growth companies. I would not hold them short for a very long period of time. Think of it like a grenade, where the longer you hold it, the more it's going to just kind of blow up in your hand, or your things don't go well. Sorry for the analogy, for the explosives analogy today. But if you like it long term, yes, absolutely. I personally am not looking for these big companies these big companies have had massive runs. What I'm looking for long term are what are these smaller companies that, like, you guys know Amazon, Google. A lot of these companies were not these massive mega behemoths that they are today, right? So if you look at Salesforce, it's had a massive run. So the time to get in, ideally with big positions long term, was back in this area when they were younger, right? And so that's what we're looking at. That's what I'm looking at, and I'm evaluating today. Or what are the companies? Obviously, this has already happened. What are the companies that we can get in now today that are in this stage who haven't had this massive run? And so if you look at my watch list, if you're looking at the smaller market cap companies, right, if we're to sort this, right, the AYX, Beyond Meat, ignore that, Fastly, Elastic, Mongo, Teladoc, Datadog, Peloton, CrowdStrike, Roku, Pinterest, Twilio, Shopify, like these are the smaller market caps. Obviously, if you go over 100 million, like Tesla in and of itself is 4 times bigger than Shopify. Do you guys see that? This number right here, oops, the market cap here is literally, let me zoom in. This number by itself is 4 times bigger than Shopify. Like Tesla is like the size of all these guys combined. Like, and so Some of these companies have had big runs. They're big companies. And so as you get bigger, growing 30% a year is harder to do. Absolutely. Absolutely. Right. So when you get into the billions and hundreds of billions of revenue, growing 30% is way more difficult than when you had 200 million in revenue and you're trying to grow that 30%. Does that make sense? Yeah. So Sammy, you're absolutely welcome to Pyramid into CRM. It's not my thing because it's already made a big run. Same thing with Apple. Lots of people have made money in Apple and stocks like that for decades. I don't know that Apple is going to 10x again in another 5 years. I do think some of these companies like Fastly and Datadog, maybe Peloton, but Pinterest, I do think those will 5x in the next, or 10x in the next 5 years, right? It's just because Apple's already made this huge run. Same thing with Amazon, Google, a lot of these companies. So we're looking for what was Google today if you were to fast forward Google back 10, 15 years. That's kind of what I'm thinking about, is what are those companies? And there's a few things I like to look at is the leadership. Do they encourage innovation, right? I've worked at and been a part of companies that the ideas were coming out faster than they could implement them. That's a good sign, right? That you have lots and lots of good ideas and you want to cherry pick the best ones and then focus your team and your resources on those ideas versus chasing any and everything because you need more revenue and you're kind of topping out in your business. So CRM, nothing wrong with pyramiding in if you want to. If you want to start that up, I could certainly see that happening. This is not for me, but I would set up some kind of a pyramid. I would be super conservative with it too. Set up a couple levels like this. Absolutely. CRM, who are they acquiring? I forget. What was the news on? Do you guys remember? I slipped my mind. Slack, yeah, work. Yep. So typically, if you guys aren't familiar, but typically there's a whole strategy called M&A arbitrage, where a company is acquiring, that they're going to go down, and the company that is being acquired is going to go up. Here's case in point: CRM goes down, work goes up. You guys see the difference? And typically that's a whole nother strategy, trading around that. But Slack is obviously buying a company, so whether or not they're obviously allocating and putting out a whole bunch of cash right now today, right? They're putting out lots of cash for a company, and typically M&A, mergers and acquisitions, when a company buys another company, usually about 50-50 odds whether it's a good deal, 50-50. And so CRM has some question marks. Well, how will this new company fit into the culture? All the technologies trying to jive all these different systems, payroll, accounting, like all these things have to be merged together. So there's some question marks, and that's typically plus CRM is definitely out the cash. That's a real number. That's why these companies go down. And then companies like Slack, obviously they're going to go because they have a pretty clear idea of where they're going to be, what the offer price was, what the per share price is, right? And so that's really how that works. So let me run through this because I have to hustle through the rest of my list. Let's go back into CRM real quick. I would pyramid in. That's really the only thing I see right now. I don't think I would short this. If you're in already, you need to wait for the next signal to go bullish. And if it chops around a little bit, you can see some kind of a moving average crossover somewhere in this range. Wait for that to happen. Do not chase it higher, right? I can see that happening on CRM. Next is FLGT. Never even heard of them, but if we were to, it's Momo said give a short signal here at the close of this. I don't even know what they do, but look at that. It's saying, actually in this case, it's saying go bullish at the close on this strategy. The other one, Momo said to go bearish. So that's interesting. Two signals in different directions at the same time. So interesting. Let's look at the naked put sales real quick. Close right around. Yeah, so I could see that happening. I could see some put sales where you get your dollar signs. If you want to do a little farther lower strike on those, absolutely. As long as we stay above the long-term moving averages. Yep. Yes, it is absolutely going sideways, but that's okay. That's the good thing about naked puts, right? Is if it goes sideways, you let the time decay work in your favor, you can make some R's. Absolutely. Let's take a look real quick at eBay. eBay is another one of those companies that is not necessarily growing super fast and I don't know what innovation is coming out of eBay, but when you make a list of companies that are innovative, eBay is not anywhere near the top of my list. I think it's not saying I'm bearish on it. It's just not for me. It's not on my list, right? And you look at the sales, it's not that 30% that Matt likes, right? It's below that. Now they do have some healthy gross margins if you look at it that way, right? You look at the gross margins, definitely above 50, 60%, which means that big chunk of their revenue is some nice healthy margins. Absolutely. Okay, next is Momo for eBay. Probably would have given a trigger over here somewhere. Okay, yeah, so right here, and then it flips. So yeah, if you're not in, I would actually, you guys see this right now, actually is the current price is below the entry. So if you're not in yet on this situation, this is a great thing you could do. Watch this trick. Let's do a stop limit buy, meaning the price has to go back up to where you would have got in to begin with before you get triggered. Now, the cool part about that is if the price, you guys see the blue line is right here. That's kind of where the current price is after hours. However, if the stock goes lower, you're not in. If it goes higher, you're triggered in. Does that make sense? It's kind of like you miss the move. However, you get a second chance, but you can be a little selective, a little picky about getting in if you use a stop limit order to get into eBay. Next, let's take a look at Google. Let's see, Google. Yep, our Momo says get in right here. Congratulations to any of you guys who are in there. I do not play Google. Google used to be super, super innovative. I know things change over time too, right? It's not on my radar. Let's see, their sales, their revenue growth is 14%, gross margins 52%. So they got some decent margins. Just the growth is very much slowing down. But you know, what do you expect with $178 billion? How many zeros is that, ladies and gentlemen? 172 billion. Lots of zeros. So Google, yep, definitely. I would be bullish on it. I'm not in this. This is not the kind of company I trade and I like to hold. Certainly got some signals to enter. Oop, we saw that. I saw for a split second. See that, ladies and gentlemen? There's a signal, Jonathan. Bullish on one strategy on the 10 EMA and bullish on Momo, both of them. Yep. Same day. Good signal. There's something to that. Okay, one more, and then I gotta run. Upwork obviously had a nice move higher. Our signal for the 10 EMA would be to get in right here. Now, of course, that's over earnings. I only get in over earnings if I have enough, and I hold over earnings if I have enough of a profit cushion. So let's say I'm up 2R, I want to be able to spend probably half of 1R to buy a lower price, a protective put over earnings, right? So I want that trade to be able to finance its own life jacket. As you go over the waterfall, as you go over earnings, you don't know what's going to happen. It's a hit or miss binary outcome, good or bad. Good earnings sometimes go lower, bad earnings sometimes go higher. You never know. But if you put on your life jacket, you're protected either way, right? And the trade is profitable enough. That's how I like to, if the trade is profitable enough, then of course it makes sense. I do notice this massive candle here. I'm sorry, massive volume. So I would see this being a good support level for that. If it breaks and closes below, we're probably going to be retesting some of these levels. So obviously if you're in, great. If you're not in, wait for Momo to tell you when to get in. In this case, it's saying to get short. I would probably would not short this because it's had a massive run, but I would wait for a signal to get in and go bullish. That's what I have on Upwork. So ladies and gentlemen, let me go ahead and collect real quick, and we got to run. I got to collect your tickers. What do you have for me for Merchant Monday? Let me hear from you. Pinterest. Okay. Love it. Teledoc. Yes. What else? Snow, Apple, ATVI, yes, DK and DraftKings, BJ, CME, LMND, yep, C, okay, CLDR. I'll look at it in just a second, Danny. What else? Amazon. Apple is on the list. Yep. Okay, cool. All right, ladies and gentlemen, thank you so much. I'm going to stop the recording.